Peter, advisors and clients, practically everybody is looking to get into private market assets. So what should they be looking for in a general partner?
Yeah, there are a number of things that we hear from clients every day. The most important two things are global, global, global. They're looking to diversify outside the United States, given where we are in the world today, and ease of use. So evergreen structures, as opposed to the historic drawdown structures that most private markets firms have kind of come to market with, are not necessarily the right fit for many of the individual investors that we deal with today.
We'll talk about structure in a second, but why do they want to get out of the U.S.? Talk about why you want to diversify globally when things are pretty hot right here in the U.S. right now.
So if you think about it, if you look globally, in the United States, right, we have mostly public markets, but those public markets have been shrinking over the last several years. And when you look at the companies in the U.S. that produce $100 million in revenues or more, 90% of those companies are private. If you go to Europe, about 95% of those companies are private. If you go to Asia, 85% of those companies are private. So if you're only looking through one lens in the US, you're giving up the opportunity set in Europe and Asia.
So are there any specific trends or sectors that you're watching right now that you really like? Because everyone's shopping them all around. So a lot of the good ideas, they're out there perhaps.
Yeah. So when you look at some of the things that we do, and EQT as a firm, we're the second largest private equity firm on the planet. And that surprises some people. I like to say we're the largest private equity firm that most folks in the US haven't heard of. And so when you look at our businesses, we manage private equity, infrastructure, and real estate. And so when I think about our infrastructure business, it's really interesting because you hear a lot about data centers and about the growth in technology. But what we really think is an incredible part of that business is creating and funding the energy sources that are going to be necessary to power those data centers so that AI can make all of our lives better going forward.
Now let's talk about the vehicles. Why is an evergreen fund one of the better ways to invest in alternatives?
Yeah. So historically, private investments were really the reserve for institutional investors. And it's only within the last 3 to 5 years that we've seen this really significant push into what's called an evergreen structure, which is it's a structure that allows investors to not have to deal with capital calls. It eliminates the J curve, and it allows investors to easily allocate across their equity and fixed income book versus a drawdown structure. It gives some level of liquidity, but what we always say is when you invest in an evergreen structure, if you need liquidity, you should always have another pocket that you can pull from if you need to get that liquidity structure.
And then finally, how is EQT working with advisors so they understand your offerings, especially when it comes to things like liquidity and cost, which scares away a lot of investors?
Yeah, advisor education is very important to us. We actually have a part of the company called Think, THINQ, and that's actually a content-based business for us where we put together content, and based on the advisor's journey in private markets, it can start as simple as what is private equity, how do you allocate it to your client portfolio, and it can get as intricate as what are the benefits of allocating to infrastructure and what are the implications across a broader asset allocation.
All right, well, thanks for coming on talking about it.
Thank you. Very good to chat with you.